Hey, I'm Mindie Kniss. This is The Daily Rage. I'm here with my mentor, Hubert Senters, and we're going to do a little market wizard style interview on today's video. So, welcome, Hubert.
Thank you.
You're welcome.
Thank you.
So, starting out, should people get into the markets? You've been in the education space for a long, long time. And what do you think on that?
I would say yes and no. So it's
Okay.
complicated. Depends on what your situation is. If you're younger, yeah, you should definitely get in the market. Just do index funds, put money in there, make it automatically withdraw from your paycheck if you've got a job or if you own a business, automate it so that you never see it. That way you won't spend money that you don't have, right? Just automate it into like a Vanguard total stock market index fund. Never look at it. Put some money in it. The younger, the better. The more, the better. So that when you retire, when you're 60 or 70 or whenever you're going to retire, if you're going to retire, you'll have, a couple $1 million sitting there waiting on you. Now, if you didn't do that and you're sitting there and you're 65 and you're like, that's great. I didn't do that when I was
Wish
18.
I would have known.
Yeah. And then you're in a different situation. I look at it as you should have, I think everybody should be in the markets, but it doesn't make sense for everybody to be in the markets if you don't have some discretionary income to throw at the markets. If you're 65 and you're looking down the barrel of retirement and you don't have enough money to last by the time the money's going to run out before you die, right?
Yeah.
So then you're going to have to go get a job again or live with family and stuff. In that situation, I would look at my income or my net worth in three different buckets. Conservative, got to be able to eat.
Definitely.
More moderate, risky, but not like super sketchy. And then off the rails, sketchy, all risk, right? But with risk comes really good rewards too. That's why it's so risky. So if it was me and I was 65, I would take, and I didn't have a lot of money, I would take 10% of my income, no more than 10%, because if you lose 10%, you can still live, right? And I would put it in 5 of the top cryptos and then 5 altcoins and just go, okay, this 10% of my money, I'm probably just burning it.
Yep.
It would probably not make me anything, but you could also get lucky, right? And one of those actually take off. Now, here's the misconception that a lot of people believe in. Like Bitcoin costs $55,000 to $60,000. They're like, I can't afford to buy one of those. No, you can buy what they call a shard. I call it a sliver. You can do it like that. Now, there's another concept that Warren Buffett will teach you, like put everything in one nest egg and watch that nest egg. Or do you diversify a little bit?
But most people are not Warren Buffett.
Yeah, it's true. That's true. Most people are not. So now if you're in the middle class, so you had the young people that start out right out of the block and are just going to do the smart thing, put some money away, a percentage like 20% of their net worth or income or cash flow into an index fund and just let it grow over time.
Yeah, I wish I would have done that
when
I was younger.
Yeah, sure, we all do. And then you're older, 65, about to retire. What do? We talked about that. But the middle people, you're going to have to do something in between, right?
Right.
You still have my safe money, my moderate money, and then my risky. So you still got time. Mm-hmm. So you can still, what you don't want to do is risk to ruin. You don't want to do, all right, I'm going to put all my net worth in cryptos. That's a bad idea. This stuff could go sideways in a hurry.
Right.
But I think it's worth the risk and reward to do stuff like that.
Okay, so let's talk about swing trading versus day trading. You and I have talked about this significantly because I was all about the day trading. I thought that was super sexy.
Yeah.
And really what it did for me was help me lose a lot of money real fast.
Very common. Day trading is super sexy, but it's fucking hard to do.
Yes.
All right. But it's super sexy because everything I'm going to do, I'm going to grab it and I'm going to let it go. I'm just going to scalp and make several $1,000s a day. It is harder than it looks, okay? So I would caution people about going into day trading, and I would caution people away from going into futures, right? Because that's the ultimate day trading vehicle is futures, as opposed to stocks and options. But here, you're going to make most of your money swing trading or longer term investing, okay? So swing trading is you're going to hold it for longer than a day, like say 3 days to 60 days, right? That's a swing trade. Long-term investing is you're going to buy it and you're going to hold it forever. The only problem with swing trading is the federal government has decided that if you have less than $25,000, they look at you like you're beneath, like you're a subhuman or something. Like you can only trade 3 times within 5 days, and that's the rules. Oh, they should be able to trade a little bit more than that.
Well, how about as much as they want to? And
it's
if
their
they
money.
Wipe out their account, that's on
their
them, choice.
Right? But I see what they're getting at because it makes total sense. So they'll keep the little guy down that doesn't have at least $25,000 to potentially roll the dice on the risk and see if he can get a reward. But if he loses all his money, they won't do anything about that. They're trying to prevent that. But when the banks blow up,
they just come in and save the day.
It's okay, right?
Yeah, it's totally fine.
There's no rules for the banks, so they can blow up, and we all have to save them with our tax dollars, and it's okay for them, though, right?
Exactly.
I think that should be fair across the board. I think the banks should be able to implode and go underwater and go out of business.
Yep.
Because if I lose money in my trading account, Uncle Sam's not going to
no
send
one's
me.
coming to save you.
Nobody's going to send me funds and go, "Hey, man, sorry you had a bad week." Like
right.
a bad week, I just got wiped out. And nobody saves me. So why are they saving the big banks, and why are they holding the little guy down? Just because you don't have $25,000 of risk capital to put in the markets, you should be able to at least play with the big boys. You're probably going to lose anyway, but by you limiting them to 3 trades in 5 days, I don't know how that's helping them.
Okay, so case in point, that is one of the reasons that I love futures and totally shifted everything I was doing from trading equities into trading futures. That's all I trade right now.
Right.
Because you can trade as much as you want, and
nobody's going to care.
A little more leverage, which means more reward and more potential risk.
Yep, they are more leverage. One thing you could do is to dip your toe in the futures market. Take your stock market index fund, your Vanguard S&P 500 or whatever the index fund is. Open you up a small futures account and somebody that's got good margins, good initial maintenance, all that stuff. A low-cost futures broker, an FCM, okay? They're going to give you the cheaper rates as opposed to like a Thinkorswim or a TradeStation or somebody like that. And then what you can do is you can learn, like, oh my God, the market's rolling over. I want to get out of my long portfolio. No, you don't. You want to watch your long portfolio go down, buy while it's going down, but then you could ride the downside with your futures account and you can kind of dip your toe in the water. That's probably the easiest way to kind of learn how to hedge your portfolio.
That is awesome. And again, something that I would have liked to have known earlier.
Mm-hmm.
What are some of your favorite trades?
I trade a lot of bonds. I trade a lot of indexes. I trade a lot of everything. I trade cryptos. I really anything that's moving. I will trade it all, and I'll do long-term investing, swing trading, and day trading. I was originally taught how to day trade and then turned into a swing trader. The reason you want to swing trade is it's high yield, low overturn. In day trading, it's low yield, high turnover. So if you want to be in a business vehicle, then swing trading and investing longer term is a better vehicle than just trying to scalp day trade on meme stocks like GameStop and AMC and stuff like that.
Yeah.
Most of that ends in disaster. And I'm not saying that you shouldn't be able to trade it. I think everybody should be able to trade that. Just as long as everybody knows the risk, like, hey, heads up, these rules are stacked up against you. And you don't have hundreds of millions of dollars to get these trades off at a millisecond of day trading. And so you're going to be competing against the big boys. So it's probably going to end in disaster for you. But hey, here's the risk. Knock yourself out.
Mm-hmm. Yeah. So I'm just following in your footsteps, going from day trading to
swing trading.
Figuring out swing trading.
We're trying to get you to swing trading quicker than I got to swing trading, though.
Exactly. Yeah. So that is awesome. Thank you so much.
Thank you.